Hey everybody, Boris, let's speak Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar for August 19, August 23rd, 2019. And really, the next week, which is sort of the end of the doldrums of summer, the absolute quietest time in many ways as everybody really completes their summer vacations in the northern hemisphere, is the week when we're all waiting for catalysts. We're all waiting for various headline news to break. The actual calendar next week is very quiet and unlikely to have any impact on trade. It's really going to be headline driven. And as usual, the headlines that we know of course, are pretty much the same. It's China, Hong Kong, UK, Brexit, trade, and essentially the possibility of perhaps stimulus out of Europe, which is a new headline that kind of hit end of day that provided a stop to a one-way slide in the euro. Now, looking at the levels have moved a little bit this week, but not much. Euro did come down, but kind of held against this 1050 level. And really, it's in the process right now, as we'll take a look at the charts, of kind of trying to see if it can hold the double bottom, which is going to be at a 1000 level. If that survives that level, it's really sort of in many ways a double bottom testing all across the major. So you have this double bottom testing in euro around 110. You had the double bottom tested in dollar yen at around 105, and you had the double bottom tested in pound at 120. Now these are very precarious tests. I'll be the first one to admit that all of them could just fall right through, given the uncertain nature of all of the catalysts that support them. But for now, if you're just sort of looking at the technicals, you kind of close your eyes and assume those are the near-term lows against which you trade going forward. Now, the calendar itself is very, very quiet, especially on the major side. There's really only one major release this whole week, which is really going to be on, I mean, we have housing data, but housing data has just been completely immaterial in the US section. But the one critical day of releases will be Thursday, when we have a slew of PMIs, not only in Europe, but also in the US. And the reason why this is sort of important is because at very minimum, the market is just looking for stabilization. We've had kind of a very interesting divergence in the global economy where global business has been effectively in a contraction and a recession really for the past maybe 2 quarters, or a slowdown that is teetering in Europe, certainly in a recession for the past quarter, whereas the global consumer in the OECD or the G11 universe has actually held up very, very well. Now, consumer is always the last one to go, but the longer this kind of discrepancy lasts, the more volatile the markets become, because you sort of have to have the businesses begin to recover or the consumer begin to crack, because this kind of gap is just not going to be able to last for very long. So the most important thing in many ways is if you're looking for a bullish risk scenario, is that at very minimum, businesses need to even out, stabilize. And that's why the market's going to be watching the Thursday PMI data, because it's really going to be setting the tone as to whether perhaps the worst of the business recession is over, or we are going to drag everybody else down with us. Aside from that, that's really it on the major side. There's no UK data. As I said, everybody is effectively away on vacation. And we could have a very, very quiet week, assuming there's no catalysts going forward. Now, looking at the text here, what you see today, the new big story. So we have the old stories of China trade, Hong Kong tension, US and China going toe-to-toe, tariffs delayed, but tariffs denied. We're all familiar with all the major headlines there. We also have the secondary story of UK Brexit, Johnson moving, all steam ahead on a hard Brexit deal, on a no-deal Brexit, and Jeremy Corbyn trying to prevent him very, very poorly, I might add, as an opposition candidate. But that's the tug of war in the two stories. The new story that hasn't really fully been officially confirmed, but kind of did appear, is that the German government may finally be open to the idea of running some fiscal deficits. Remember, there's an enormous amount of pressure now on Germany. Germany is the locomotive of Europe. It runs a massive surplus in everything: trade, budget, everything. It is essentially a saving hoarder. And unless it's willing to, and all of this at a time when it's literally does not get, gets paid to borrow. every single bond on the German curve is negative yield. So the argument here is that they could just go out there, raise money at negative yield, and spend to their heart's content. That is, unfortunately, a problem with their law and their constitution. But today there was some first-time rumors floated by a German magazine that maybe the German policymakers are finally open to loosening the fiscal restraints. If that's true, it's actually incredibly bullish euro, because that's really what the economy needs. It needs that particular fiscal stimulus. There's just nothing the ECB can do at this point. They've done it. They've bought every single bond in the world. They brought rates to below zero. It's pushing on a string from them. But if Germany can come in and do a massive fiscal spend that would actually lift all of the European demand forward, that would be very positive, and I think you could see the euro begin to recover. And that's really the inkling, the foundation for this double bottom formation here, against which you trade on the assumption that maybe this is a thin ray of hope that holds for now. Cable, the thin ray of hope that holds now is that somehow Brexit will be amended, denied, delayed, and UK will remain in the customs union. And that's what you see here as the foundational bottom around the 120. We're still struggling to take out the 120, 150, and very much the 122. But it certainly feels like they're building a broad base here. And again, this is really a function of either Boris Johnson doing a last surprising deal, the Nixon goes to China kind of a deal, where he manages somehow to negotiate a settlement with EU, or he gets bumped, and if he gets somehow taken out as a leader, that's viewed as positive for a more conciliatory figure to come in and try and negotiate a final deal. Either case, this is still very much a punt in many ways, but you know where the risks lie, you know where the opportunities lie, and at this point, both in the market's essentially expressing the optimism, both in cable, mild optimism in euro, and certainly some optimism in yen as well, because yen here essentially acting as a double bottom against the flash crash bottom on the news that Trump, first of all, delayed the tariffs, and even though they're going toe-to-toe with China, that both parties in the trade dispute are just clearly not willing to go nuclear. They understand the dangers of escalating this war. And so while the rhetoric may be hot, the actions are relatively cool, and that's what the market cares about, is the actions. Still, maybe there may be too much damage done at this point, but for now, this has certainly been the positive risk. I'll say this: if you're sort of trading this technically and fundamentally, the thing that destroys the positive story here is if we take out the lows here. That would completely reject the healing hypothesis and pretty much take us right back towards the hard trade war idea. And then we only have one last chance at around the 104.50 to hold. If that goes, that essentially expresses a very, very negative risk-off view towards parity, which is where a lot of the bears are targeting. Very hard to predict right now. The only thing we can see from the charts, of course, is that the market is expressing hope all across the three majors, in the euro, in the pound, and the yen, to varying degrees, and that's where we trade, given the information we have now. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.